Let's start with your word of the day.
My word of the day is whiplash, and I don't think it really needs an explanation. But listen, the messaging out of Washington is very confusing. It's impossible for businesses to plan around this. We're even talking about tariffs on components that U.S. companies need to manufacture things like cars in the U.S. So listen, we're all in the midst of uncertainty right now, and investors really need to find ways to look through the trees, through the forest, and focus on the long term.
All right, in this very uncertain environment, you got a pick for us. What's your pick today and why?
Yeah. Listen, when you think about really focusing on what's working and also what might weather the tariff storm, I think about a couple things. One is the defense sector. And so it really is an area that really may benefit from increased government spending and geopolitical tensions, right? Amid geopolitical tensions. So listen, when in doubt, follow the contract. So General Dynamics is one, I think, to pay attention to. So it's strong defense and cybersecurity business. They also make Gulfstreams, right? Jets. It's a diversified business, defense aligned. And in terms of uncertainty, in times of uncertainty, like defense budgets tend to stay intact and sometimes even grow. So GD has multi-year government contracts. Less tariff sensitive than tech or consumer names. It's actually up 5.6% in the last month. So I'm really paying attention to what's working, especially recently.
All right, let's focus on just the broader market right now. We got some comments from Jay Powell. A lot of people are taking him as very hawkish. Powell basically saying not really clear what the next steps are. Probably diminished a lot of hopes for that cut coming up in June. Does that change your view on some of the cyclical sectors? Does it change your view on any other sectors?
It doesn't, Frank. I'm always paying attention to what Powell says, but I think a lot of us are really paying attention to what's going on in Washington, and that really is the headline news, right? And so it's again, what I was talking about earlier. This messaging is changing by the day, and so it's really, really hard to come up with a plan around that. Again, I think every time I'm on the show, I'm talking about diversification, I'm talking about having a plan, and that's no different here. I think that the best defense is to have a plan, but I am thinking about, again, in addition to sectors like the defense sector, what else might work, right? And so domestic infrastructure is an area that I would also look at, and also agricultural commodities is an area that I think might provide some shelter outside of traditional gold and things like that.
Well, you're saying outside of traditional gold. I mean, gold just hit another record
Gold.
high yesterday. Why not
Oh,
be in
definitely.
gold? I mean, why not?
Oh, absolutely being gold, right?
Okay.
Absolutely being gold. But I am preaching diversification. So, what else? Yes, gold. Gold is definitely working.
Okay.
Think about what is working, right? Agricultural commodities working. There's a company called Nutrien, NTR, that's doing really, really well. SBA Communications, it's a symbol is SBAC, it's a REIT, a domestic infrastructure. Those things are areas that are working right now through all of this ups and downs with the tariffs that I think have the potential to work long term as well.
All right. Are you also focused on dividends right now? You just mentioned a REIT. A lot of people go to REITs when they're looking for dividends and just income.
Yeah, listen, REITs are really a good way to have cash and income. In addition to, like high quality stocks, but the issue with the stocks are a lot of the stocks that are paying dividends are really not doing well. So you really have to kind of, do your research and look at that trade-off, stock performance versus the dividend. Is the dividend going to make that up?